Hey, Melissa, in an SEC filing just now, Uber says that it will reclassify all of its UK-based drivers as worker. As such, they will be entitled to certain benefits, but they will not be full employees. Now, the move will increase Uber's costs in the UK, but in the filing, the company says it is still targeting adjusted EBITDA profitability by year end. In the after hours trade, Uber shares are down about 2%. Now, of course, Melissa, this comes after a 5-year legal battle where Uber has fought to keep drivers as independent contractors in the UK. Now, it does, of course, face other battles around the world. In an op-ed with the UK's Evening Standard that was just published as well, CEO Dara Khosrowshahi says he does not expect to be pat on the back for this decision, but he does hope it shows a willingness to change. We will see if that's the case as he confronts more of these regulatory battles here and abroad. Back to you.
All right, Deirdre, thank you. Deirdre Bosa. Dan Nathan, should this change the way you look at Uber, given that London is one of the biggest markets it operates in?
Yeah, clearly one of the biggest markets. I mean, I think they pretty much well defined what the costs are going to be associated with it. Their ability to kind of guide or continue to guide to EBITDA break even makes a lot of sense. I think that it is not a clear-cut case here in the U.S. Some drivers want it, some drivers don't, some unions want it. It's just one of those things that's going to continue to go on. I liken it to, remember back in the day, was Amazon going to collect sales tax or were they not? And when it finally happened, it didn't matter anymore. The company's course was set in the direction it was going to go in. And, I just think it's important to remember that this company is not expected to be, break even or profitable on an adjusted basis, at least on an EPS basis for another 2 years or so. So at some point, I think investors may start to wonder about that valuation given the headwinds or the potential uncertainty about how to classify these workers. But in the meantime, I just don't think it's that big of a deal.
I mean, I think Dan makes a good point in terms of it not being clear in the United States, given that many drivers operate, they have other jobs, they are students, et cetera. They do Uber driving part-time. But in European countries, this could be a bigger risk, which really underscores the difference, Tim, between an Uber and a Lyft.
Yes, and underscores the difference between European and U.S. labor markets, too. I mean, European labor markets are much, much more, frankly, in favor of the worker. And over here, yes, if you ask a lot of Uber drivers, they're also driving for Lyft, and they're also, driving for other folks, including 3 other jobs. I don't, look, I think this is not good news. I don't think this necessarily changes the characterization of the profit profile, and I think they're going to be cautious about what they do and how they say that. It's a stock that's run almost 80% since the California announcement and the delay, effectively, and the pushback of the classification of workers, and a time when the company is a great reopening story. So I think you're cautious here as traders. I don't think you have to do anything here for a company that's got a lot of good news priced in.
Shepard Smith here. Thanks for watching CNBC on YouTube.